What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is May 20th of 2020. Well, folks, I hope you all are having a fantastic day wherever you are, and with another day comes another wave of excessive monetary policy in the world of central banks. And predominantly here in the United States, the Federal Reserve has enacted that it's going to be entering into a new stimulus program coming up here in the month of June that's going to be providing a ton of capital relief to not only small and medium-sized businesses, but also to local and state governments. And when we talk about the size of these obligations that need to be covered by the Fed, we're talking easily about, if not hundreds of billions of dollars, to trillions of additional dollars in stimulus. So this is going to have massive ramifications, and I want to discuss the ramifications of that as we go throughout the video. So we've got a lot of things to discuss right after our quick sponsor. Alrighty, everyone, so let's go ahead and start by taking a look across the board for the market. As we can see here, over the last 24 hours, the vast majority of cryptocurrencies right now are faded in the green right now, but at the same time, even though there is a favor in the green, most of them are in a no trend scenario between 1% to 2%. To the upside or downside. And luckily right now we've actually got a lot of our top 10 plays as well as some of our favorites in the lead. Steam, one of our top 10 plays, up 28%. We got UBT, one of our other favorites here on the channel. Along with that as well, NANO, Ren, Chainlink, and a lot of other good players here. I know we as well have Cardano picking up steam. I know people have been talking about that. So again, a lot of good plays here. Aave, another DeFi play in the lending space. Lots of interesting plays doing well here. We're going to be diving into price, don't worry. I just want to go ahead and actually kind of jump into this article as a preface to this discussion, because this is probably the biggest news that, a decent amount of people maybe are talking about in the world of finance, but I don't think people really take the ramifications of how big this stimulus package is going to be. So the Federal Reserve yesterday, they were doing a meeting where they had Secretary Mnuchin, they had a lot of different congressional members coming on and asking questions for Jay Powell, the Fed chair, we see in the photo there, and along with that, Steve Mnuchin and a few others. So what we had was Jay Powell coming out yesterday on the live stream announcing a new lending program that's going to be launching likely on June 1st. And this lending program has a major focus on small to medium-sized businesses, as well as meeting the obligations for local and state governments where they've been short on revenue over the last few months due to COVID-19 and the lockdown. Now, I want to make it very clear here. I think at the end of the day, it's understandable if we're going to be providing stimulus to hedge funds and a lot of other major institutions. It'd be fair to kind of balance the books out and help small to medium-sized businesses who in many cases have been told to shut down their operations while large corporations like Walmart have easily been able to operate. So I think that in that case, I understand where the Fed's coming from and wanting to provide stimulus to these smaller businesses. Should have come sooner, in my opinion, and at the same time. But taking that into account, right, we need to understand the ramifications this is going to have, just like the previous QE programs, on inflation and broadening the money supply, okay? Now, again, this money, talking about on a consumer basis on products, goods, and services, the inflation ramifications, this will have to be seen over time. Sometimes you can inflate the money supply and it doesn't hit the overall market and lead to increased velocity, increased, exchange of dollars and hands. So in this case, we might not see too much effect on consumer prices, but this does broaden the money supply, and therefore it will inflate the value of a variety of different assets across the world, from stocks to properties to bonds to even digital assets like cryptocurrencies, as well as commodities like gold and silver. And we really need to talk about what assets are going to be leading after we've realized that the Fed is going to be continuing stimulus here. I think it's already become apparent to most of us, but really now it's becoming more clear than ever here. And again, it is not going to come cheap. You can read through some of these articles, guys. We don't know exactly the full number of it, but you can see that that a lot of these local and state governments already had massive obligations as is, with the large entitlement programs, large sets of debt that they already had on their books. A lot of states and local governments have not been balanced in their books, and there's a lot of debt. We always look at the federal debt. No one ever looks at city and state debt. And if you take that into the equation, you're talking about a few additional trillions of dollars in debt that doesn't even really get talked about. So the Fed is again trying to help and step in and just meet the short-term obligations, which again are massive in this case with the lack of revenue we've had. So let's just go ahead and see what Bitcoin's doing right now. Bitcoin at the moment still, over the past week, has been continuously pressing up ever since back here, really back in early May. For the rest of this month, really over the last 2 weeks, we've been pressing up against this line of resistance that we've had on logarithmic chart that we have yet to have a close above since back here in 2017. You can signal here that the confidence and not seeing price come down and test 8,500, continuously setting higher lows each day. This is showing clear confidence here that prices want to go higher. We haven't gotten a close above there, and until we get that, I can't be too confident we're going to 11,000 like we have on our target line here for the chart. But to be fair, guys, I would not bet against this. I wouldn't try shorting this downward. I really think that this is signaling a lot of confidence to go through. We'll really see here probably in the next 24 to 48 hours if that's going to come into fruition. So it'll either be a really exciting weekend or probably be one where we have to look for it to come down and make support here at 8,500 again. But who knows, right? Who knows if we're going to get that breakout yet? Again, I think what's likely is if we break out here, I don't think we're going to 20K instantly. I think what we're going to do is we're going to get up here towards around the upper $10,000 to $11,000 range, and we'll come down and test this line of resistance and make it support multiple times before we eventually pick up pace later on going into the fall and to the winter. So it could be a very boring summer here for crypto markets for the most part, where we push sideways. After all, we've had a pretty exciting few months here. But nonetheless, signaling strength. And again, I can't tell you a market outside of maybe gold and silver that's going to be moving up like Bitcoin could, going from 9 to 11,000 in that short period of time. Going here to altcoin dominance as well, I think this is again signaling continued strength that crypto markets want to move higher. Higher continuous lows here, significant lows. And also generally higher highs here, right? We continuously set a multitude of highs as we go through each different part of the cycle. And it looks like somewhere here, again, going into the fall or winter, we could really start to pick up pace for altcoins as we discussed yesterday. Another market that moves very similar to crypto that doesn't get talked about a lot is cannabis markets. Again, whether you guys invested in it or not, or whether you like it or not, doesn't really matter. At the end of the day, these markets move very similar like because there's a very large retail audience in this case, as there's been a lot of people going on Coinbase and a lot of these exchanges getting exposure to Bitcoin in this time of the pullback and everything, as people are getting the paycheck protection program, as well as having fears about the current state of the government, the current state of economy. In this case, we can see that cannabis in this case is moving up quite nicely. Again, setting up a new higher level here. Now, I want to see, apologies on that, guys. I want to see a break above this line because technically speaking, this would be an ascending wedge, which is usually a bearish pattern. But with the kind of volume that we're getting here on not only some of the major cannabis plays, but also on the ETF and stuff, as well as the consistency in green price action at higher lows that we have not seen during the entire bear market, I think this is showcasing that, again, whether or not this sector still has a while to go before it really matures, the bottom is going to have a much quicker rebound because of Fed stimulus. These equities have to move up to some degree if the Fed continuously injects capital, unless things are just absolutely terrible for the industry, all right? Like no one's buying cannabis or things of that sort. There's no cash flow coming through. That's when it can still drop, right? But when you're when you have the money printer going burr and it's going at levels not seen before in history, it's probably best not to bet against the market. And this is what happened to a lot of people who bought puts trying to short the market. And even though they timed it great with COVID and everything that happened, they still got blown out of the water when the Fed started to inject mass amounts of monetary policy. Take a look here at commodities as well, right? Silver picking up pace here, set a nice significant level of support up here, continue the cycle here, and what we've been seeing is not only silver rebounding up to where it was back here in March before the crazy sell-off that we had across the board in all assets, but the gold to silver ratio showcasing that silver is really picking up pace here. As this declines, it means that silver is not only outpacing the market, but that likely commodities have entered into a bull market. If we take a look back here 2008, same exact formation. Short-term technical pattern leading to a breakout in gold, leading into silver at the beginning, kind of shaping up for the next commodity cycle as both commodities usually decline, right? So this, as the ratio is going up, it usually means that gold and silver are declining. That's usually when gold wins out. And then after that, for the next few years, from 2009 to 2011, really to the late part of 2008, we took the ratio from 83 down to 32. What does this remind you of? This right here, the short-term technical pattern, significant breakout with gold and silver selling off to setting in their final lows. And in this case, silver starting to lead the way. It's a signal that commodities right now are in a bull market. And you can take a look at the ratios here. You can see that over the last, back here since 2016, right? We went bearish on equities back here in 2018. Gold has been the best investment that you could have made compared to equities, or I would say excluding Bitcoin and stuff. If you were just comparing gold and equities, like the S&P 500, in this case, the broader S&P 500 in this case has been outpaced by gold since back here in October of 2016. If you bought down here, you're doing pretty damn well. You're outpacing stocks even in a world with Fed monetary policy. And it showcases the importance of not getting too caught up looking at one specific asset. Take a look at silver here, guys, over the last couple of weeks, right? Been setting continuously higher lows here since back here, and the bottom it set in here in September 2018. Look at how similar this is to the bottom we had for silver back here. Multiple higher lows and a continuation much higher going into the further cycle here, into a really almost up to a decade bull market here from back in December of 2000 all the way up to August of 2011 when we set the peak. We're setting up for that next decade-long cycle, guys. This is going to have ramifications for the next coming years. And it's going to reflect in not only the performance of gold, but also silver, and likely in new emerging assets like Bitcoin. Again, there's no coincidence why this is happening. There's no coincidence why after the halving event, with the reduction of newly issued Bitcoin, providing relief on the sell side pressure of Bitcoin due to miners not having to sell as much dollar volume of Bitcoin. And also the Fed injecting large amounts of capital here. Family funds, hedge funds, everyday investors, even investment bankers across the world. There's a good chunk of people, especially with the recent catalyst we had with Paul Tudor Jones coming out in support of it, Chamath, a lot of other well-known investors starting to speak highly of Bitcoin in this time. People are starting to realize, whether they fully understand it or not, this thing is winning the race, and it's winning by a long shot. Equities are doing decent. Gold and silver are doing pretty good too. Nothing is performing like Bitcoin, right? So again, I don't want to just, I don't mean to just be a cheerleader here, guys, for an asset that we all appreciate and stuff. Bitcoin is an amazing technology, and I think it offers a great opportunity for us to be able to hedge against the system to some degree. But this is just looking solely at market data, taking a full macro viewpoint here, and trying to cut out as much bias as possible, right? Whether you use Bitcoin or not, or whether you're a fan of it or not, it doesn't matter, right? Again, it's the same. The same goes for my opinion, right? Again, I could love Bitcoin or I could hate it, like Warren Buffett, and think it's rat poison. But rat poison tends not to go up from around the low $3,000 range upwards towards nearly $10,000 in a matter of a couple of weeks. So, I mean, this really speaks to something. And as we take a look, and we're taking a look at the daily here, but if we take a look at the weekly, and we're just going to go ahead and turn off our drawings here, take a look at the monthly. This is looking really confident. This to me looks like a chart that's ready to start picking up pace and enter into the next cycle. Of course, bear in mind, over a longer period of time. As we've talked about again, and I will emphasize multiple times because it's probably the most important thing that people, I think, sometimes struggle to get in crypto markets because things can come so quick. Each of the cycles is broadening its time horizon. Right, sure, we still have the halving event happening every 4 years in Bitcoin, but I think that we're going to start seeing a lag and a disconnect from that halving event as we go through, because the major stock to flow changes have already been implemented, right? The reductions have already been integrated to a large degree. And after that, we'll continue to reduce it half and half every year, but that effect will have less and less of an effect. And along with that, as you talk about market to scale, you're not only talking about having to get to much higher valuations that previously were unthought of before, but it's going to come with decaying returns, and it's going to take a longer period of time because of that. Right? It's much more difficult, as we've probably emphasized before here on the channel. It's much more difficult for an asset to go to $1 to $100 billion, right? Sorry, let me rephrase that. It's much more difficult for an asset to go from a $100 billion asset to, for example, $1 trillion asset than it is for it to go from 100 to 100 billion, right? That's 100x, 1 to 100 billion. But the kind of liquidity that you need and the time you need to go from a 100 billion to $1 trillion market cap is much more difficult. And that continues to scale up. If you're talking about $1 trillion to $10 trillion, just take a look at gold, just take a look at all these other markets out there. It's dependent on how we can actually get the liquidity into the market in order to justify that price. Can Bitcoin really provide that hedge? That's the real question. And if it can, if we can provide the conduits, the outlets for people to be able to get exposure to this new asset and actually utilize it as it's intended, to be your own custodian, to own Bitcoin and be able to hedge against monetary inflation, then in this case, Bitcoin's already set for 100K or higher, right? This is our general target range. And we are actually quite conservative comparative to most people. We believe it's going to be at the end of 2020 in November, December, where we reach up to this high, setting in 47 months from the bottom here back in December of 2018. We're already well on our way into the cycle, guys. We're exactly where we need to be, whether you're looking at the stock to flow model, whether you're looking at pretty much any data science model. Bitcoin is where it should be right now. And it's starting to cusp up and look like sometime here going in to the fall into the winter that we could get back up to 20K. And the Fed, as well as other central banks like the ECB and the Bank of Japan, and the People's Bank of China, the Bank of England, and the countless other central banks across the world that are doing the same damn thing. They're making it easy to get there. So, putting it simple, enjoy the ride. Let's keep up with all the interesting things that are going on, guys. And if you like this video, please drop a like. It's always appreciated. Always love hearing from you guys as well. So leave a comment down below if you have some thoughts on this. If something's going on at the ECB or the Bank of Japan or one of these other central banks that, again, follows suit with this nature that you guys think would be important to talk about, please leave it down below in the comments. Talk about anything that's got you interested at the moment. Love to hear from you all. But until the next video, thank you all so much for watching. Always love being here with you all, and I hope you have a wonderful rest of your day. I'll talk to you all soon, and I'll see you all in the next video. Take care, everyone.